Hi, and welcome to Funding by Alex. Today, I would like to talk to you about what happens after you raise funds, so deploying capital, because the after also helps you with the preparations for when you raise money. First of all, an important mindset is to always raise with a clear purpose in mind. So, not just raising for the sake of raising money without actually knowing what to spend it on. So, you need to define exactly what you will spend the money on. So, I need this for tech, I need this for people, I need this for marketing. All these things are very important because it gives the investor an idea like, okay, when I put $1 million into your company, what will I get out of it? So, am I actually investing in scaling the business, or am I just investing in an ego trip from someone who is trying to get as much money as possible? Then investors will become your partners as soon as they invest in your company. So, this is not someone who will just hand you a bag of money and then say, okay, bye bye, call me again in a month and I'll update me on what is happening. They actually can be very hands on, maybe weekly come to your office, come up with a lot of ideas, push you towards certain directions, certain partnerships, depending on how much equity they get into your company. Basically, you have to listen to these people to treat them as partners and yeah, basically adhere to the rules that he who pays also decides to some extent. It is still your company, don't worry, but the point is you need to take in consideration that investors have a say. So, what happens when founders get a lot of money from investors? They are looking to scale. They are looking to say, oh, I have started in a garage with two people, and now I'm getting a lot of money, and I'm going to hire a ton of people and invest a lot in marketing, and I'm going to scale this. Now, scaling is a very good thing if you're at the stage of scalability. If you scale too early, meaning you don't know whether the traction is there, you don't know whether this is actually going to work, then sometimes you can end up scaling at negative margins, meaning you scale something that is not sustainable. You can scale something that doesn't make you a profit, meaning you burn a lot of money, your burn rate is going up quite considerably, while in the end, your money runs out before you can blink. The idea of this is like sometimes it comes from yourself, sometimes it comes from investors. So as soon as investors hand you a bag of money, the pressure is on from investors to grow. So that is can it be perceived, that can be something that is partly due to the fact that you faked the entire presentation by saying, oh, I've had a lot of traction already and all the numbers I'm presenting, etc., etc. Selling your house, not actually telling people that there is a leak in the roof, that you need to still plant all the stuff in the garden. Basically, the garden, you already sell it like as if it is actually already done, not 6 months down the line. Now, this leads to a lot of pressure from investors. Investors definitely want to grow, definitely want to have their money back with several X returns, basically. Now, this pressure can be very crippling for founders, especially if you haven't found the formula what works. So, scaling, sometimes for the sake of scaling, you fake it till you make it, basically, faking the numbers in order to appease investors is a very bad idea because at some point, it will catch up with you. There's a Ponzi scheme that can't go on forever by new investors actually putting in money. And yeah, in the end, you will run out of money, you will run out of investors, you will run out of credibility as well. So faking the numbers definitely is not going to last. Unfortunately, it is the reality for a lot of startups. So, what is the right thing to do when traction is slow? So, if you said, okay, I have had this brilliant idea, I had this idea to scale it like this, but it doesn't work the way I wanted it. The adoption is slow. There are several things that I can't figure out in time to actually tweak in order to get the traction. Honesty lasts longest. Go back to your investors and say, look, guys, I know I thought it would work like this. Unfortunately, it doesn't. So, this will go a long way because these people have invested money in you. They have sunk already a lot of cash into the business and they would like to give you a chance to succeed. They would like to maybe add people to your team. They would like to come up with partnerships that might work. They might have ideas that actually could work for you, basically. So these are all things that is like honesty lasts longest. That's, I think, a golden rule in life, especially in this investment game. There's also no shame in actually saving the money and pivot. So there are examples of companies that said, look, I have tried, for example, the quick commerce boost boom, basically. There have been companies that said, okay, I still have a couple of $1 million left in the bank, but actually quick commerce is not working. Let me pivot and start something else. So this is not a shame. This is something that is, yeah, basically you've had the chance from the investors to build a business. They've invested in you. As long as you communicate it properly and they agree, you can build something else with the same investment, basically, and maybe add some investment as well. The bottom line is don't tank your relationships and credibility. That is the most important thing. You need to be able to think about it as building relationships with investors is over a long period of time. Doing business is getting to know each other. If getting to know each other means, hey, this is a guy who is just BSing and not doing what he promises and then tries to hide the truth from me, do you think you can still show your face later on? Definitely not. This is just like a salesman who says, okay, I sell you something that you don't need. I just sell you something that's broken. And when you have a complaint, I'm nowhere to be found. Now, yeah, that's basically the same way as founders and investors would work. The same thing as investors who are too pushy, too aggressive. Yeah, then there are not a lot of founders who would like to work with them. So I mean, in both cases, it is really a relationship and about credibility. So if you burn your fingers on this, so failing is not the end of the world. It's just that if you do it in a dishonest way, yeah, you are done for life. So what should you do then? So you should raise with a roadmap in mind. So the roadmap meaning like you go from A to B, from B to C, from C to D, etc. The questions that you need to ask yourself is A, do I need more money? B, how much money and for what? So again, define for what you need the money and by when. So these are the points where you need to raise. Prepare this carefully. So, you need to plan the runway. If you have runway for a year, then you should start raising in maybe 6 months' time already. Say, look, I'm almost out of runway. I need to go to the next phase of my business. I need to raise again. It takes a long time to raise. It can be existing investors who are chipping in for another round or new investors that you need to approach. Not all funds, namely, have the ability to invest on top of the current investment. Normally, VCs have a rule that maybe 10% of their fund can be invested in one portfolio company. So, if let's say it's a $10 million fund, they can maximum spend $1 million into one venture. If you still need to raise and they've already maxed out their investment in you, yeah, then that's tough luck. Then you need to get it from another investor. That's basically the reality of it. You need to keep it in mind that raising with a roadmap, meaning like thinking ahead. So if I hit these milestones, what more money do I need? Do I need to pivot a little bit? That is also something that you need to keep in mind for all the contingencies, basically. I hope this has been helpful to you. I've been personally involved in raising over $200 million for various companies, startups and existing companies, basically established companies, M&A up to a pre-IPO investment, basically. I would really like to invite everybody, if you have more questions, please email me at alex@goldendragoncapital.co, not .com.co, and I like to see you in the next video. Please don't forget to like and subscribe. Thank you.